September, and we have a fantastic guest this month. It's Miss Linda Kaiser, and she is going to talk to us about all things money.
Okay.
Money and taxes. So she
Not paying money.
Okay, not paying
Not
money.
paying the IRS money.
So why don't you tell people a little bit about who you are, how long you've been in the business, and then we can hit some of the questions we get.
I'm a CPA. I have an office in 3 Lakes, Wisconsin. I have been a CPA. Actually, I just got my 25th anniversary Wisconsin Certified Public Accountants. Little paperweight, so must be 25 years, right?
Yeah, she actually does a lot of my stuff. It helps me out immensely. When you talk numbers with Linda, her eyes don't cross like mine do, which is always it's a good thing. So we're having here today because we get a lot of questions about when people are in the process of buying or selling, about taxes, advantages, 1031 exchanges, all different kinds of things. So we thought it would be in our best interest for you to have somebody talk to us a little bit, go over some of the most common questions we get asked, so you can hear from the professional instead of from the realtor who should not be answering those questions. Right. So I think that's the first thing to know.
Yep, that's true.
If you have any real questions, don't trust your realtor.
Right.
Talk to an expert, and
Right.
we will happily connect you. So one of the questions we get all the time is what tax benefits are available for first-time home buyers, and how do they qualify for those benefits?
So currently we have no tax credits for first-time home buyers. They will get the same deduction possibly on Schedule A as any other homeowner would get, which would be your property taxes, your home interest, right? Your interest that is reported on your 1098 from the bank.
Okay.
More likely than not, you're going to take the standard deduction because the standard deduction is so high now.
Okay.
That some of that, those property taxes and those home ownership benefits, it kind of get tossed away, because the standard deduction is so high.
Okay.
However, Wisconsin does have their property tax credit, which is worth up to $300, on the Wisconsin return, and they also have the itemized deductions still. So the mortgage interest could do you some good over there.
Awesome. So another benefit of home ownership versus renting or owning, because you don't get any of those tax benefits if you are renting.
Well, in Wisconsin, you would get a renter's credit. Yes.
How would that compare dollar-wise to the tax credits for home ownership, like on a $250,000 home?
Well, it would probably be pretty even, Steven, because your rent is going to be so high.
Okay.
Do you see what I mean from the Wisconsin side of it?
Okay.
And if you're looking at a $250,000 house, depending on what your property taxes are, you're probably maxing out that credit at $300 anyway.
Okay.
So yeah, you're not going to be sitting at maybe $150 credit for say $150,000 home. You're going to already max it out. And you can't do any better than that anyway.
Awesome. Okay. The next question we get a lot is what are the tax implications of financing options like FHA, VA, or conventional mortgages?
As far as tax goes, there is really no difference. You're going to get a 1098 regardless of how it's financed. They're going to give you the mortgage interest that was paid. Obviously, you probably have a lower interest rate if you are in some of these government loans. Yeah, right, state or federal. Yep.
Okay, awesome. How does the mortgage interest deduction work, and what documentation do I need to be able to claim that deduction?
So you're going to receive a 1098 from the bank. It's going to tell you what you paid in mortgage interest.
Yep.
And again, that is going to land on the itemized deduction schedule of Schedule A. And again, most taxpayers are taking the standard deduction and losing out on that, additional deduction. It's not an additional, it's a one or the other.
And most people, which one, just because it's easier, do most people pick one over the other? Or is it worth something for them to maybe call their tax accountant to say, hey, what should I be doing?
So in our office, we put all of the information into Schedule A, and then we actually compare to see which one is better. However, in 2018, when Trump changed all of the tax laws, he created a standard deduction for individuals that are almost $15,000, and the married joint is, double that. So you're hard pressed to get over that on Schedule A. Plus, you have SALT limitations, which means state and local taxes are limited to $10,000. So if you have state income tax that you're paying plus your property tax, and you're going over $10,000 with that, you're going to be capped at the 10.
Okay, so there's nothing, so
Yeah.
at that point, they're not
Yeah.
gonna get anything above and beyond that anyway.
Right.
Awesome. Okay. Are property taxes deductible, and how do I report those on my tax returns?
Again, same answer as we were just talking about.
Okay.
It goes on Schedule A, it's limited to the SALT limitations, and then it's compared to the standard deduction. I would say 90% of our tax returns that are done are taking the standard deduction.
Okay. So actually just made me think of something because we were talking about the loan programs. So I know that in some states, if you are a veteran and you have a VA loan, you don't have to pay property taxes. Is Wisconsin one of those states?
That might be true.
Okay.
I will tell you this, if you're a veteran and you are 100% disabled, the state of Wisconsin reimburses you for your property taxes.
Okay. Good to know.
I haven't seen the other
Property tax.
available
Okay.
credit that you're talking about, but maybe they are getting it and we just never see that.
Well, I was listening to
never
somebody
paid.
talk about VA loans, and it was on one of these, national podcasts,
Yeah.
and they were saying that some states that actually you don't pay any property taxes. So I didn't know if Wisconsin was that, but it's something we'll have to look into. But I love the fact that I don't love it, but if that you're disabled, that they will pay 100% of it.
100% disability veterans
Wow.
do not pay. They pay the taxes and then they're reimbursed on their tax return.
Okay, good to
So
know.
you have to make sure that you're picking up that credit.
Again, another reason to talk to a tax professional. Awesome. And the next question I have is, what are the tax implications of home improvements? And can I deduct any of them from my taxes?
So in 2022, we had the Inflationary Reduction Act, right? That created a lot of these energy, home improvement tax credits, biomass, stoves have huge credits. There are a lot of home improvement credits out there, as long as you're making your home energy efficient. So if you're doing that, save the receipts, maybe even do a little research before you make the improvement to make sure that this improvement is qualifying for these tax credits, because they're big this year.
Wow. So if I didn't realize that. So if you have a 25-year-old home and it needs some improvements, where would I as a consumer go to look for that specific information?
Well, if you go to Home Depot, Menards, they use Energy Star a lot, so you could probably
Okay.
Google Energy Star.
Energy Star.
It's a matter of whether it's personal, it has to be so much more efficient, and then I think it's got a higher threshold for business property, commercial property. But as far as the individual residences, the personal homes, which now include mobile homes for these tax credits,
Wow.
which is the first time they've done that, you need to do some research before you make a final decision on that, because you could be leaving money on the table there.
That's fantastic. So that's huge, especially mobile homes, because we have a lot of those up here as well. And think of your 25-year-old furnace, and these things have to be replaced regardless.
And that was a change this year, January 1st, that they included the mobile homes.
Awesome. So question for you, when they make a change like that in 2022, do we anticipate that's going to last through 2023 or the rest of this presidential term, or is there any way, or do you just say it happened right now, we know it's a good in 2022, we better do it right now before we lose the opportunity?
It's good in 2022, 23, and I believe 24. There is an end date to it. I don't have that off the top of my head. So yeah, I can get that. I can look at that and let you know.
Cool, but that's good to know that they have, if they can't do it this year because we're already in September, that they might be able to do it next year or the year
Yes.
after.